Morning everybody, welcome back to another CYT live show. My name is Stephen Aitchison and today we'll be going over the markets, looking at Bitcoin and why I think Bitcoin could go up to $13,000 before the Bitcoin halving in May. On May the 9th, I think it's May the 9th, round about May the 9th this year. And we'll look at previous kind of halvings as well. A lot of people, there's a lot of kind of debate about this, but I'm just going to give you kind of my opinion on it, and we'll be looking at a couple of news stories. Okay, we'll have an overall market capitalization of 238 billion, or just under 238 billion just now. It's going down slightly. As well, we've got a Bitcoin price of 8,631. It's held that 8,600 price. So we'll take a look at that in a wee bit as well. Who's the winners and losers? We have Digix Dow is up 12.41%. Bitcoin SV going back up 11.17%. Still think there's a great opportunity for shorting there. MaidSafe Coin is up 10.58% as well. That did drop a lot, but it seems to have come back up again. And that's the only three in double-digit greens. And percentage-wise, we have probably about 60% in the green and 40% in the red. We'll look at Satoshi value and see if that makes a difference. A slight difference, yeah, about 75% in the green, 25% in the red. Go back to USD, see who the losers are in the top 100. Centrality down 16%, the only one in double-digit red. Nexo, Cryptocurrencies, Theta, Decentraland, all down as well, but not by that much. And small percentage point for a lot of them as well, the other ones. So, kind of middle of the road day today. We'll look at the biggest gainers and losers across the board. We'll just refresh this and see what's going on. Quadrant Protocol is up 101%. BlockNet up 88%. Xstock is up 86%. Elysian 51%. EOS DAC 51%. Scanit Chain is up 43%. Trade Plus, Gene Source, Lightning Bitcoin, Dentacoin is up 36%. Sentinel Protocol 35% as well. CP Chain, I like the look of CP Chain. Last year, towards the end of last year, I was looking at that. So that's the biggest gainers and losers of the day. We'll just look over the last 7 days, see if anything's changed. BlockNet, GameStars, Euclid, UBQ Chain or Ubique, and 0x Bitcoin. Okay, first before I go on, I want to kind of make you aware of Uptrend. I've spoke about this a couple of times, and there's a link down below if you want to join Uptrend. This is a social media platform, and it's getting bigger and bigger and bigger. I think there's about 60,000 users, and we're still in beta. It's a beta version, and what you do, you can post up to 3 times per day, and I think I love this part of it. You're only allowed to post up to 3 times per day, and you gain kind of upvotes for your content. So I've got one here at the top. The lowest and highest price for Bitcoin for the next 10 years has got 219 upvotes, 29 comments, and from that I got maybe about 300-400 one-up tokens. So you can earn one-up tokens. You can see here I'm at level 24. You go up various levels. I'm at level 24, and over the last week or so I've gained another 2,633 one-up tokens, or upvotes, but they convert into tokens as well. You can either save them or level up to the next level. So to get to level 25, which is really high in this kind of Uptrend platform, 16,980 tokens. And also the one-up token is actually doing quite well just now. So you can trade the one-up token as well. And so it's at around about 36 Satoshi just now. It's up 5.8% today. And we'll just go over the last day or so. So you can see here, it came off around about 910 Satoshi. This one I recommended it. So it's up about 200% already, but I think it's going to go higher than this. Remember, we're still in beta for Uptrend, 60,000 users, and I'm on it every single day. And I know who else is on it? Omar Bam is on it as well, and a couple of others. We've got Altcoin Buzz is on there as well, and it's just a really good platform, really good community. There is a lot of comment kind of farming on it, but that's going to be weeded out very soon, I would imagine, when the kind of players who are really in it to give great content are in there as well. And they've added a couple of new categories. It was all about crypto, but they've added a couple of new categories as well. They've got a gaming category, they have a personal growth category as well now, which I'm posting in, which is good. So I would urge you to kind of sign up for this and start earning crypto for your content. I think it could be really good, and I think it's going to be really big as well. And the good thing about it is it's just kind of driving slowly. It's not as if they're kind of trying to push it too fast. They're just doing it very, very slowly. Still, a lot of people have not heard of Uptrend, but I think it's going to be a really good and big platform. And I love the way they're just kind of building it up very, very slowly. So there's a link down below if you want to jump onto that as well. I think you'll really enjoy it. So look at this news story is Bitcoin halving isn't priced in based on this indicator, which means price will react. This is from Samuel Wan from newsbtc.com. So on May the 9th, 2020, around about May the 9th, the 630,000th Bitcoin block will be mined, during which mining rewards will be cut in half to 6.25. So from 12.5 Bitcoin every 10 minutes or per block. Each block is about 10 minutes it takes to mine. So it'll go down from 12.5 Bitcoin to 6.25 Bitcoin on May the 9th. That's what the Bitcoin halving is. And typically the speculation on how this will affect the Bitcoin price is rife just now, which is very true. A lot of people kind of talking about it and kind of speculating as to where it's going to go. In terms of past performance, halvings seem to exhibit patterns that generally show themselves to be positive as far as the price action is concerned, but there is much debate regarding when the effects of a halving kick in. Do they occur in the run-up to the halving itself, or are they felt after the event? Me personally, I think it's both. On top of this, some believe halvings have no influence on price whatsoever, and what will be regardless of the halving. So this is kind of historical performance, and this is what I want to look at as well. So we'll go to that when I'm looking at my own chart. I've got a couple of things to show you as well. In regard to the last halving, a similar pattern was witnessed with 112% gain the year before, which was closely tracked by 2,867% peak after a year as well. And they've got the argument against Bitcoin being priced in. So he's saying that a lot of people are saying this is not priced in yet. A lot of people are saying it's already priced in the halving. So however, coincidence is the operative word, and there's no direct evidence that halvings were the cause of the price rise before the halving, especially when analysing the 1 year time frame. Crypto investor Alistair Milne points out that patterns do, with interest over time, indicate that halvings are not priced in, and so he expects significant room for Bitcoin price to react. I share that sentiment as well. As does Adamant Capital, Third Demister, puts forward a similar case as well. So that leads us nicely to the Bitcoin price just now, and we're going to be looking at the halvings as well. So I'm going to give you the macro view just now. We'll go down to the weekly. This is the macro view. Right, you'll see a couple of vertical lines there, and we've got this channel here, the ascending channel for the Bitcoin price overall. And this is really since it started back in 2011 on Bitstamp. So the purple lines, purple dotted lines here, are when the halvings occurred. And this one is going to be May the 9th, 2020. So this is when the halving is going to occur here. So the last two halvings, let's kind of put this down here. I'll get rid of this. So we're going to look at the last two halvings, and we're going to look at the previous 4 months. So we're on 4 months to go until the halving. So 26th of November, so we've got October, September, August, July. So we're going to look at round about here. May, June, July, August, September. So we're going to go August, probably around about here. August, September, October, November. I need to go to July. Now I'm just trying to work out 4 months. So we're going to go July. So around about $6.36 in July, we got up to about $16, came back down, but just before the halving, we got to about $12. So 100% increase 4 months before. And then after that, obviously you can see what happened there. We went from $12 all the way up to $1,200. So we're just going to measure that after the halving. Where to get to 8,000% increase, and that was up to its peak before the halving. So So we're saying it was $6.30. Before the halving, we did jump up 162%, but just before the halving, say it was around about 100%, 96%. So that's back in 2012, before and after the halving. So this orange vertical line represents the peak. So there's 4 years between the peak as well. There is 4 years between each halving as well, these kind of vertical dotted lines and the purple lines. So let's go to 2016. I'm going to go 4 months before. So it's July, so we're talking around about March time. We're talking around about a price of say $400. It did go up to $775, a 90% increase. But just before the halving, we're at 672. Again, we'll measure it. So we're going to go to March. So 99, say 100% increase, and just before the halving, 70% increase. Okay, and then after the halving, you can see what happened. After that, we did come down. We kind of met this line again. We're going to say from here, and it increased by about 3,000% to its peak. So we're seeing 8,000%, 3,000% there as well. And similarly, could we see something similar to that? So what I've done is I've kind of extrapolated the information from 2015 to 2017, put it in here in these green lines, and where we could be before the halving. So where could we be? We could go up to around about 13,000 level. We're talking by February, March time, go up to the 13,000 level, come back down just before the halving. We're at 11,000. So that would give us a rise currently from these prices of about 31%, but before that, before it drops down, kind of talking about 55%. So this is what I genuinely think is going to happen. We're going to still go up and kind of get up to this 13,000 level, come back down just before the halving, and then we start to shoot up, kind of go up to 18,000 and even more than that. We get up to 25,000, but that's not going to be until February 2021. But I think we'll break the 20,000 relatively easily. There's not going to be a hoo-ha about it. It's not going to be a resistance line. It's just going to break through it and just keep on going up. I think that's what's going to happen. But before the halving, I think we're getting up to 13,000. And that's just going on kind of historical, the prices historically from 2015 to 2017. We'll go back to auto. Okay, so take a macro view of that. You can see the purple vertical line of the halvings. You can see what happens after it. You obviously can't see what happens after May 2020. It's not happened yet. But after the previous two halvings, jumped up significantly, majorly after the halvings. So even if it doesn't go up before the halvings by another 30% or something, we can expect it to go up after the halvings as well. Purely because of supply and demand, which I've spoken about yesterday as well. So I think that's going to be quite significant. And the orange lines are the peaks. As I said, that's where the peaks occurred. And that was kind of more or less every 4 years. And again, if we come down here, it would suggest a peak of around about 340,000. And just making sure, around about 344,000. And that would be at the end of December 2021. So 340,000 would be the peak there as well, if we're going by this 4 year kind of peak cycle. We've got another 4 year cycle for the halvings as well. So it's up to you what you want to extrapolate from that information, but I think the future does look good for Bitcoin. Okay, this is a new bill in Congress, could have a massive impact on Bitcoin, Ethereum and other cryptocurrencies. So last Thursday, the Virtual Currency Tax Fairness Act of 2020 was introduced in Congress. The bill has the potential to solve a major issue with payments made via Bitcoin, Ethereum and other major cryptocurrency networks, in that an exception would be created for the potential capital gains taxes that often occur when these digital assets are used in everyday commerce. I don't think that's a major problem just now, but I think moving forward with the likes of Bitcoin, Ethereum, Litecoin I would say as well, and XRP, I think moving forward with them is going to have a big impact but I don't think a lot of people are buying a lot of things with cryptocurrency just now. So this is Bitcoin tax issue. A key usability issue with Bitcoin payments is that taxes may need to be paid in a situation where a capital gains has occurred, which could be when someone is simply buying a meal with Bitcoin at a local restaurant. Under current US law, the use of Bitcoin to pay for goods or services is treated as a sale of those Bitcoin holdings, which is a taxable event. So whenever you go out to pay for a meal, it's not treated as a taxable event. So you won't get taxed on paying for that meal. But if you sell Bitcoin, you're effectively selling Bitcoin to pay for that meal. This is what they're saying. You're effectively selling Bitcoin to pay for that meal. So that in and of itself is a taxable event. So while a previous version of this bill was focused on implementing a tax exemption for transactions in the amount of $600 or less, a different approach has been taken with the 2020 version of the bill. In the Virtual Currency Tax Fairness Act of 2020, capital gains taxes are only exempt in situations where the gains made by an individual as a result of the transaction would be greater than $200. So it's only if the taxable event is greater than $200 amount. Still not sure about that. I still think it should be better than that, to be honest, but it is a way for kind of Bitcoin to be, Bitcoin, not just Bitcoin, but Bitcoin, Ethereum, Litecoin, XRP, etc., to be used as a currency. So if it's under $200, you can pay for that cup of coffee without being a taxable event. You can pay for a meal without being a taxable event, going to the movies or anything like that. So I think it's good from that point of view, but still $200, I think it should be better as well. But I suppose if you're buying a car, say for $10,000, $20,000 or something like that, that would be a taxable event. But there would be ways around that as well. So this is somewhat similar to exemptions that already exist for foreign currencies. So cryptocurrencies like Bitcoin are at a huge disadvantage when it comes to potential use in daily commerce. That said, moves by governments to issue their own digital currencies this decade could be extremely helpful to Bitcoin's value proposition. So a lot of people are going to, well, a lot of countries are going to be, or a lot of banks are going to be issuing their own CBDC. So I can see that happening more and more. We said that at the end of last year, that CBDCs are going to be at the forefront of a lot of people's minds, and I think 2020 is going to see that. If passed, the tax exemption would be instated for the 2020 fiscal year. So that's good news, possibly good news for Bitcoin and the other big cryptocurrencies as well. Analyst 60% chance of Bitcoin ETF in 2020. So this is from Tom Lydon. He appeared on CNBC's ETF Edge on Monday, and the potential for the Bitcoin ETF approval in 2020 was a key topic of the conversation. So for one, he's saying this is why the SEC recently approved its first 40 Act approved Bitcoin fund in the form of NYDIG Bitcoin Strategy Fund. So he's saying this is the case for the ETF being approved later on in the year. He said what it does is basically prove that it's filed as publicly traded, so you can, like a regular mutual fund like the Magellan Fund, and there's a sister mutual fund out there where you can invest in Bitcoin, explained Lydon. However, it's limited to only 25 million at this point. Lydon also pointed out that CME began offering Bitcoin options for the first time on Monday, and the UPTRENND CEO claimed the SEC's concerns regarding a lack of liquidity and safety around the Bitcoin asset could be mitigated through the use of options and futures, which is one of the big things the SEC was talking about, the lack of liquidity. Lydon shared his view that there's a 60% chance of a Bitcoin ETF happening this year when asked to provide a prediction, and DataTrek Research co-founder Nick Colas then shared his belief that there is only a 10% chance of a Bitcoin ETF being approved in 2020, and CNBC's Bob Pisani agreed with Colas' prediction, only a 10% chance. So cases for both sides of an ETF. Personally, I think it's going to happen, but personally, I'm not really bothered, to be honest. I think it's going to be a good thing when it happens, but don't really care. Either way, I think we heard enough about it in 2019, so I think Bitcoin could survive without kind of the ETF. Here's why some financial advisors are adding Bitcoin to their clients' portfolios. So this is from a new report from Bitwise and ETF Trend. So notably that the report indicates that roughly 9% of independent registered investment advisors currently allocate a percentage of client funds to crypto assets. 9% is a hell of a lot. It doesn't sound a lot, but 9% for allocating part of the funds to crypto assets, that's a big number. I think it's only going to grow. So according to the report, the rate of crypto investment among RIAs is higher than the rates found with financial planners, wirehouse representatives and broker-dealers due to the relative lack of restrictions independent RIAs face in terms of types of investments they're able to make on behalf of the clients. So while overall allocation among financial advisors is still low, around 6%, the report indicates a potential doubling or more for this sort of activity in 2020 based on survey responses. So it goes on to say, to Bitwise points, data from the second half of 2019 appears to show that Bitcoin's role as a digital gold is going from theory to reality. Additionally, one industry executive pointed to this increasing view of Bitcoin as a digital gold when making a $50,000 Bitcoin price prediction for 2020. But that said, only 9% of financial advisors surveyed in the report view inflation hedging as a reason to add crypto assets to a portfolio. The report states that part of the reason for this seemingly low positive response rate could be due to a lack of concern regarding inflation today. I think that's a key point there as well. So other things will just kind of go on. In addition to the potential for returns uncorrelated with other assets, 30% of financial advisors said the high potential returns found in the crypto market made exposure to this asset class attractive for client portfolios. In terms of specific roadblocks in making a crypto asset investment with client funds, financial advisors, including the survey, pointed to these issues. 56% regulatory concerns, and I think that's our big concern as well, what's going to happen with regulations. 43% are saying it's too volatile. Fair point. 41% no idea how to value cryptocurrencies. And 39% lack of easily accessible investment vehicles like ETFs or mutual funds. This is where the ETFs could come in big time as well. 34% custody concerns, fear of hacks. 31% lack of understanding. 31% lack of understanding. Financial advisors, and they don't understand what kind of Bitcoin and cryptocurrencies are all about. Okay, CME's future options sprinted out of the gate, but a marathon lies ahead. So when the CME option contracts made their debut on Monday, the company saw opening day trading volumes of just over 2.3 million, more than 5 times that of major competitor Bakkt, which traded just over 380,000 on its first day. It's not trading that just now. Second day options trading on CME was slightly lower, with 730 million in volume according to Skew. Perhaps that's to be expected, as investors keen to participate have bought into CME options on the day of the launch. So this is a spokesperson told Cointelegraph, we continue to see strong interest from a growing base of customers in a Bitcoin futures and options complex, which offer a broad range of options for interacting with and hedging positions in digital assets. I'll not go on to that. It's a good article actually, so I'll post that down below for you. Britain's tax agency offering contract for tech to combat crypto tax evasion. So Britain's tax agency, that is HMRC, is inviting contractors to provide a tech tool to help Britain's tax agency combat crypto cyber criminals. The technology, which Her Majesty's Revenue and Customs, HMRC, posted on January 17 in an open contract call worth £100,000 sterling, which is about $125,000, should gather intelligence through cluster analysis. The HMRC's cybercrime team hopes this will help them correlate crypto asset transactions with service providers. So the cybercrime team was created to shield Britain's tax revenue from attempted fraud. Specifically, HMR's repayment system is vulnerable to complex and clever criminality, hacking, malicious software, malware, and distributed denial of service are leading offenders. Phishing scams are most notable and have evolved from email to text form, and so-called smishing attempts work because people are readily responsive to make HMRC and the criminal messages appear credible. So I've had a couple of messages from the HMRC as well, and they do look credible. Obviously, I'm always wary of anything coming from anybody, to be honest, and so I'm always on the lookout, and I've found them a couple of times. Remember, take a look at Uptrend. There's a link down below and you'll get 100 1-up tokens as well if you join, and I'll get 100 1-up tokens as well. So there's an incentive for me to get you to join, but I just think it's a really good platform, or I wouldn't suggest it. So check that out as well. And until next time, namaste. Take care. Bye now.